The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will. If y'all can hear me out there, give me a 1 in the chat just to make sure that I'm got a little new setup here. Make sure it's working right. Give me a 1 in the chat. Give me a 1. Let me get a 1. Somebody throw up a 1. Okay, great. That's what I need. Thank you, CR Frank. Thank you, brother. Let's see. Everybody knows what went down today with gold. Well, from the technical, what we know is that it went down. Why it went down, we don't care. That's for fundamental folks to give you a reason. It went up, it went down because the market got tired of it going up. That's the reason. People buy and sell things for various reasons. Not everyone is sitting there reading reports, government reports and things like that to decide. There's a camp called technical market technicians, technical analysis folk, that's the camp I'm in. We buy just because it's going up. That's it. We'll buy a rock. If you're buying it and you make that rock price go to the moon, we'll buy it because you're buying it. Okay. And then we use other techniques to see when the trend is likely to end. Technical analysis is a discipline that has been around for at least 120 years. So it's not fly by night. Okay. Fundamental analysis is I would say, I guess you could consider a competing style, but a lot of people use both. They mix them together, which that can work as long as you're clear that the technicals are superior. Because if you mix them together and you're not clear on that fact, you'll be sitting there what to do. When you're reading, say, an earnings report or some government backwards looking data, because all these reports are about the past, they're about the past quarter. When you're sitting there reading that fundamental information, versus, and you're staring at a price chart that's telling you something that's contradictory to the earnings report or the government data. And we know often those, I'm not going to say often, maybe that's too much. Let me say at times, the data, whether it's earnings report or government data, it's massaged. Okay. It's a political instrument. Okay. They count certain things and don't count certain other things. And so you have to interpret the significance or the completeness of the data, like the unemployment numbers. They don't count you once you've been unemployed for a certain amount of time. You don't count in the numbers anymore, but you still exist, But anyway, let me get back on track with what we got here. I was looking through Yahoo News. I was on there for some other reason, and I saw this. It says 82 billion gold bug ETF. That is GLD. It's like the biggest. It's one of the biggest single symbols that people invest in when they want to get a part of gold. When they when gold is hot, this is one of the main ones. There are few gold companies, only a small few, that have more money invested in them than this one ETF. There's a couple that are larger, but not many. It's probably like 2 or 3 gold companies that are larger than this daggone GOD, you know. Let's see. It says here, after a massive rush into the world's biggest gold ETF, some investors trimmed their positions amid mixed economic outlook. That's that information I was talking about. You're betwixt in between. You got to be clear that the technicals is the technical information is superior because that's in real time, and the exodus, if you will, from gold happened on Friday. So and so you can see that if you're taught, you can see that suspicious kind of behavior in the price chart and other oscillators. Okay, and that's what we technical traders look at. We're measuring, I guess you could say, sentiment based on the price action on the chart. Because if something is popular, it'll keep going, straight up. As it loses popularity, the momentum kind of slows down, and there's certain let's see, I'm trying not to get too deep into it, but there's certain psychological factors. It's like go straight to sociology. There's certain behavior that humans do. We just can't like not do it. And it actually shows up on a price chart. There's certain opinions we have about when something has gone up too far, and then we kind of go, I think I'll wait for it to pull back. It's uncanny that people come to these same kind of mass conclusions about price when it shoots up too high without a pause, and then we won't buy it, and then so we're kind of like force it to go down, and then it'll drop, and then we'll go, okay, I think I want to buy it now. And it's a very it's uncanny how it's mathematical, and technical analysis studies those patterns. And like I said, technical analysis is over 120 years old, and in patterns that some of the quote unquote fathers of technical analysis that they noticed, say from the 1890s all the way through the 1930s, many of those things that they noticed way back then, they're still true today. Projections they made about price, it's close enough when you consider they didn't have computers and all the things that we have right now. You take into account the growth of the population. So, but I don't want to ramble too much on that. Y'all can tell I am fascinated by technical analysis, and that's why I'm Dollar Will. Not because it's like some cool thing to say in the hip hop era, but I'm Dollar Will because tracking how the US dollar relates or correlates or negatively correlates with other currencies in the world, and certain other commodities like oil. When you learn to read price charts and you follow that relationship, you have your finger on the pulse of the global economy. And so, of course, you then know how to manage your money, but you also know in a bigger picture what's going on in the world, and it'll twist your mind because you won't even be able to watch the news the same way. Because they'll mention a part of the country and you'll think immediately, okay, what does that country sell, and how does that the price of that commodity, how does it relate to what's going on with the dollar? Oh, okay, so that's why we're in that region. Okay, and you'd be surprised how often things have you already know. I guess you wouldn't be surprised. Everybody knows follow the money. Okay, so when you learn how to read the charts, you literally know how to follow the money, and they can't hide that. But that's what's going on with this past Friday, and I'm gonna get to some charts. But first, I want to get to this deal with our fascination with gold. When you get into this chart reading discipline, like I said, it will shape your mind or reshape your mind about global I'm not even going to limit it to global economics. Money affects everything. Money affects everything. Your politics, it's often money related. You know, your national security interests as one of those, you know, way we kind of cloak a lot of things under that banner. You know, often it's money related. You know, so we have certain beliefs. When I say we, let me say I'm not talking race. I'm talking just American, just people, common citizenry, that in our public school education system, not only do they not teach us about personal finance, they don't teach us about macroeconomics, and that's a sin. And so, yeah, so the little anger you might hear from me from time to time on my channel, that's my axe. That's my axe. Because it's like, to my mind, it's creating an underclass intentionally. It's creating a slavery class intentionally, you know, irrespective of your race. Okay, so there's a point where class and race intersect, and it's right there with that money, you know, and the fact that we are deliberately miseducated or not educated at all about basic things about how the U.S. dollar works relative to oil, in this industrialized economy, oil is central to it, or energy is central to it. You can't run that factory without some source of energy. So you can really see the productivity by watching the usage, the utilization of oil. So when you get those kinds of numbers about, and you see information about how we have a glut and oversupply of oil, and we've been in a glut for a while because of greed. But hey, why wouldn't you? If you knew that oil was valuable and it was going to be whatever the price is today, it would be worth more a year from now. Well, that's kind of been the case for a very long time. That kind of easy money created a greed, and that same thing went with copper, gold, silver, you name it, nickel, cobalt in the iPhones and all that. All those material, all those basic materials have a, generally speaking, they have a negative correlation with the dollar. And gold is one that chiefly has a negative correlation with the dollar. But we have this myth, that I hope, I wish I could kill it today. I'm gonna try my best to kill it today. You know, let me say right off the bat, I'm not anti-gold. I'm anti-ignorance. Okay, I can't buck dance around it. We have to fight this ignorance that neglectful school system allowed us to have, and our neglectful news media allowed us to have, that to have this opinion that you will be safe financially if you just buy gold. It's ignorant and false, and I'm going to prove that today. And I could have done this any other day, but I said, nope, I think they'll be willing to listen. They'll listen a little harder on a day when it starts declining. I think they'll be in a little pain might make them, listen a little better. They might not only hear me, they might feel me. They might feel me. I want you to feel me. Okay. So, the other lie is buy a house. The two big lies: buy gold and you'll be safe. Gold always goes up. You'll be fine. And buy a house, you'll be safe. Both are lies. There is nothing that's constant. Change outside of change. There's nothing. There's no safety in ignorance. None. We got to learn how these things work. So this is a good article you can read. It talks about right and wrongly, gold is widely viewed as an inflation hedge. Okay. So, I mean, crudely, we'll let's just define inflation as prices going up. It's more complex than that, but I'm gonna leave that to the economists. You can look it up. But the way we feel it is price going up. And when prices goes up, gold is a hedge against that. But what the media is neglecting to tell everybody is that with this slowing economy, inflation is not the fear. It's deflation. Well, like the man said years ago, rent is too damn high. Okay, everything is too high. Your house costs too much. Everything costs too much. Okay, your salary didn't keep up with the rising cost of things. That has to be corrected, or that will be corrected. It will be corrected by the price of everything coming down, and nobody wants to talk about that because it would spook the economy. So, I mean, but rich folk, big money folk, the 1%, they know all of this. So they know when they exit. So when you see gold falling like this today, who do you think that is? That's not you and me. That's the richest people in the world. That's governments. That's countries. But they don't tell us that. They allow us to continue to believe that, all we got to do is buy gold, and buy real estate, and we'll be all right. Meanwhile, they're not doing neither one of them. I tell you, we are the created underclass that this brand of capitalism needs, but I'm gonna leave that alone. All right, let me see. Reliable measure of protection against purchasing power risk. The precious metal may not be the best option for that purpose, though. Some gold investors fail to consider its volatility as well as its opportunity cost. Yada yada yada. I'm gonna get my link down here. Treasury bills as a far safer haven. Yes, I will be talking more about bonds. I'm not nowhere near an expert on it, but I understand this one basic fact. Okay, that's key. Every month or so, the federal government issues bonds, and a bond is a loan. A bond is a loan from you to the federal government. In the case of a treasury bond, a bond is a loan from you to a state in the instance of a municipal bond. A bond is a loan from you to a corporation in the form of a corporate bond. And so, as you've seen in the stimulus program, there have been stories about the government buying corporate bonds. So the government is moving money to, they've been buying quality companies like Apple and, the bigger S&P 500 companies. And they've also been buying junk companies, low credit profile companies and that's called junk bonds. But the main deal with this bond thing, as crudely as I can put it, where we can easily digest it, is the interest rate generally declines. Okay, so if you look back over the last 30, 40 years, the interest rate generally declines. And I know it's counterintuitive, but the US dollar generally declines. It's not broken. It's made to do that. Because what did we say earlier? In inflation, as prices go up, gold goes up to keep up with it. You receive your paycheck in fiat US dollar. You go to the store, you buy material items with it. You are engaged in trade right there. You trade your money for that car, for that house. And that car and that house is an assemblage of commodities. So you're in this dollar trade all the time. But as simply as I broke that down to you right there, and you clearly understand that, why didn't they do that for you in school? It's not that difficult. If Dollar Will can explain that, and I'm a college dropout, if I can explain that to you in several seconds, they could have explained it. So when you get this understanding of the dollar globally, you know something basic like when to buy a house. Because when the value of the dollar is falling, value shifts from the dollar to those commodities: oil, gold, steel, copper, aluminum, You can invest in your retirement account. Your retirement account is very much linked to this, and you invest in it when you buy that home and call it an investment. Generally, you're right. It is an investment. Generally, gold does go up. That's a fact. But there are exceptions to that rule, and the exceptions are so important that you can do great damage to yourself if you ignore those exceptions. And if you don't know technical analysis, you never give yourself a chance to know when you're in one of those exceptional periods. Let me repeat: I am not a financial advisor. Um, Contact your plan administrator at your job to have a conversation about your retirement. If you're concerned about any of these things, about deflation being a greater risk than inflation, ask them. Go to your bank and Google online, see if you can get some free consultation. It's out there. Look for it. But everything I say here is just my opinion. With all that said, please like, comment, and subscribe and share my video on your other social media places, because the stuff I'm about to talk about and show these charts, you're not going to see it anywhere. Okay. All right. So that's the bigger macro deal. With the dollar goes down in value, the other currencies in the world generally go up. In at some point, the dollar at various points in time, the dollar goes down too much, and the dollar hit a low in 2011, and the dollar has been trading up and sideways, and I'm going to show you this on the chart since that time. But the media, if you just judge by what they say on TV, they would make you think that the dollar's just been like in just like this spiral. It depends on when you slice time. But if you say, okay, what's the low? What's the all-time low for the dollar? If they told you that low was 9 years ago, you would not respond the same way to their pleas that the sky's falling or the dollar is dirt. No, you need the dollar to go down, because the dollar going down shifts the value of appreciation to the materials you purchased when you bought your house. Okay, so you need that, and your the S&P 500, those big companies, a lot of them make actual products, and those actual products in some one way or another is tied to commodities that we had to dig out of the ground, and the value of those commodities go up as the dollar goes down. So you need the dollar to go down to make your retirement account go up. I know it's counterintuitive, but that's the seesaw. The complex interrelated relationship between these different assets. That is the global economy. Okay, but like I said, there are some key moments when the dollar does not play fair. Okay, this is a picture of gold, and without getting too much in the Elliott wave theory that I discuss on my Patreon, if you want to really get deeper on this and learn how to make some trades and understand, I guess have your own guidance about what's going on, and be in a better position to understand what they're telling you in the news, and to know when, hey, wait a minute, the person giving me the news doesn't sound like they know any more about this than I do. And that happens a lot too. All right. But in Elliott wave theory, we look for 5 waves up. Okay. And anybody can count to 1, 2, 3, 4, 5. This is a symbol of gold versus the US dollar. So just to make the point here that gold is not always safe. This is a high in 1980. What does this thing say at the bottom? I think it's 883 or something like that. I got old man eyes. I gotta give me a break. I'm old, okay? I'm in my late 50s. All right, so what is this? 80? Yeah, something like that. I can't see it for crap. Yeah, this is 1980. Yeah, 1980. And this is just one time. I'm going to show you how if you buy the idea, all I got to do is buy gold, and I'll be all right. Everything will be. This is 1980 was the peak. I graduated high school in 1982. Run DMC was kind of new, but we had a little go-go, DC go-go, New York rap connection via Curtis Blow. So we had all of the daggone Run DMC records at our parties, right along with Rare Essence and Trouble Funk and the go-go stuff. So we knew about rap before the world, before the people outside New York. But anyway, the gold chains. There's a reason why the gold chain was the icon, the status symbol of wealth, because the price of gold had hit this big level right here. It was a historic level at the time. Okay. And so we all equated gold with wealth. And so that's how gold became the thing in hip hop. Okay. But nobody cared about it for a real long time prior to that. And so then gold started to decline from 1980. It didn't find a bottom until right here. And what the heck is this? 1999. Yeah. Let me see. Good. All right. 1999. Okay, so that's from 1980 to 1999. So what is that? That's 19 years. That's 19 years you would have lost money. If you had bought gold up in this area in 1980, and this is for the people that say, well, it always comes back. Well, damn, everything always comes back. A broken clock is right twice a day. I mean, come on. So this thing, 19 years you lost money, and you didn't break even. From 1980, you really didn't break even until this spike here. I would say I'll give it the benefit of this earliest moment. 2006. Okay. So you talking 26 years. You put money into gold, and 26 years later, it's worth the exact same amount. And no way is somebody going to tell me that's a good idea. Okay. So you would have been pissed this whole time. So nobody was thinking about gold during this decline. What was going on during this decline is Apple was invented. Okay. Computers took off. Semiconductors started becoming a household thing. Then what did we get after that? The tech bubble. Okay. The dot-com bubble. All of that is what happened around 2000, and money flowed from the dot-com semiconductor space to this thing called gold. And that's what happened. Money primarily went to gold and healthcare, and then a lesser amount went to housing. And those were the three things that really rose the most. If you look and do the research back from 2000, we technical traders, this is what we do. We look at we look at the charts. We look at what went up, what industries, where did the money go, where did the money leave? Because these trends last for long periods of time. Okay, they go beyond a decade. Okay, so you see, this was more than a decade, and the rise from 2000 up to here was more than a decade. Okay, so this is 2011. Okay, now I thought this was it, meaning that we were going to get the end of this 5 count, and this thing was going to tumble because it goes back. I'm going to show you some other charts too. But hey, it fell at around 2015. It caught its footing, and then it took off. And this is the trend that we are basking in right now. Okay. All right. Now, the problem is, let me see if I got. Okay. This is that same time frame from 2015 to now. This is a monthly chart. I just blew it up. And according to, this is an Elliott wave count, how we're sitting at 5 right now. It's not a coincidence that this price flipped right here. Okay, so we got a 5 count. Now, although, I mean, this is, I'm struggling with this one, because this wave count meets all of the requirements of my particular as a theory or school of thought within technical analysis. Is called Elliott wave theory. This count meets all of the requirements of a completed 5 wave count. But the fact that we got such a small rise above this high, it's disturbing. It's confusing to me, but it shouldn't be. It shouldn't be. There's a rare thing called a truncated fifth in Elliott wave theory, where you get a fifth wave that goes higher, but the wave is small. It doesn't last as long as, say, this one. You know, like, look at this. I mean, look at these waves. Look how long that rose. This started like in 1970 and went to 1980. And so, but then, okay, so now we get to the fifth wave, and it only lasted 6 months. So I'm struggling with that, so, but the way that the price fell today is telling me that I need to follow what the teachings of the theory say and stop second guessing it. Okay, look, this is not a week. This is just today and only today. So big money said, F it. F it. Okay, all that talk about gold being safe, look at this, just look at it. So the richest, most powerful people in the world, countries in the world, they said, F it. And what we're looking at here is a Forex symbol. This is the world trades this. Countries, governments trade this. The richest people in the world trade this. The Forex market is many, many times larger than the stock market. The Forex market is the dog. The stock market is the tail. And the dog wags the tail. We know that. Okay, so when you see the world conspiring to say, we don't want this. And remember this article that said on Friday they started leaving. So we're out of the realm of Dollar Will's opinion. Okay, we're not talking about my opinion. It's a fact that they started leaving gold on Friday. It is a fact that we lost more money today. We went all the way back to the price level we had on the 29th. I can't see at the bottom. 29th of July, and today is August the 11th. You took out more than a week. You took out a week and a half of gain in one day. Now that's what happens when big money in the world says we going this way. And as guppies, when the whales say we going this way, we better run with them. Okay, and as technical traders, that's what we do. We look for big moves, because it is the rich folks, it is governments in the world that determine the flow of money. Now, we got it on the charts to project that, what might happen. But when you see a move like this, it confirms, it might happen. It's happening. Look at the size of this candlestick today. This is one day. Do you see any one candlestick that's that big? I don't even think this one is that big. Nothing. I'm gonna leave the scaling alone. Let me take the auto scale off. I'm gonna leave the scaling alone. Do you see any single candlestick that's this size? I'm gonna go back. We're gonna scan back in time. Don't see it. I'm going to have to do some research to see if this, where does this day rank in history, in terms of like the, okay, these are pretty big. Yeah, these are pretty nasty. Let me see. Does this tell me percentages? That's what I want to. Got a tool here that can measure. Okay, that's the whole. Nope, that's not one. I want just one. Just one candlestick. I don't want two. Oh, this magnet is on there. That's the problem. Let me see if does this thing do percentages. That's what I want to know. What is the percentage decline? Yes, it does. Wow, this thing was 10% in one day. Good Lord, I don't know if we fell that much. Let me see. But this is back in 2013. Man, but that's nothing to mess with. So all this, yeah, 2013. So this is during that window where gold was no, this was since 2011, during this 2011 decline. Let me see what this decline was today. 10% in a day. Good Lord. I don't think this doesn't look like 10%, but it's still nothing to mess with. No, it's 6%. But from all that scrolling back you saw we had to go back pretty far to see any that looked like that. Like in one candlestick. So it is rare, okay? So there's going to be single digit. It like for the last 50 years, you know, how many times has this symbol fallen like 6%? It's going to be single digit number, you know, likely less than 5. So it takes a lot of money that's committed to getting the heck out to make this kind of move, okay? And this is just in one day. So we know there's much more money out there to sell. And these are momentum oscillators that tell us that there's, you know, more to sell, more pressure to come, all right? Likely to come, or possible, let me say it that way. All right, here's the historical price of gold. Gold bullion 700-year history. I put the articles I referenced are below the video, and this one is below the video as well. Take some time to look at this. Next time somebody says gold is always safe, okay? This low is around 1870. So you can think emancipation, okay? Because that's what I call in my notes, the emancipation trade. All right. So we had a decline right in that area, not just in gold. There was a decline in the stock market around that in that period of time too. Pretty nasty decline. So we had a decline around 1870, and we didn't break even until like this point in time. That's like 1970. So for 100 years, 100 years. So next time you hear somebody in the barber shop talking about gold is safe, and this is not my opinion, and this goes for Karat bars too. Okay? Goes for Karat bars too. 100 years before they broke even. Now, what's getting me, what's scaring me, what I'm studying, applying my Elliott wave theory, the end of this line here is right now. It's like, well, I'm not like right now, but when they did this, when they finished this chart was put up in like 2020, but exactly when in 2020, I don't know. But this current price that we fell from is right around 2000, because that was all the big news. The gold went to 2000. And so you can see here clearly 1, 2, 3, 4, 5. That's another thing that kind of freaked me out when we went and took this high out, because that was odd. And gold is odd, but silver is not. The silver chart and the dollar chart, in terms of Elliott wave theory, they look structurally like they should look. And I'm going to show you that in a minute. But this gold just kept rising. So maybe it was the daggone stimulus, where we kind of went a little harder than usual with the government buying gold like that, you know. But in order to have a decline like we just did, that's the government. That's the United States government selling, getting out of it. That's the government selling its gold storage. They're not going to tell you that in real time. They're going to tell you after. It's going to come out. It's going to come out that the government reduced this amount of gold. That other major countries, governments in the world, first world governments in the world, sold gold. It's going to come out because they bought gold to make it go up. They sell gold to make it go down. And we're just the guppies. And technical analysis allows you to be dependent on what you see on the chart and not waiting for what you hear on the news. Learn from someone. If not me, pick someone. You cannot afford to be without this critical understanding. So find you a technical trading coach. And, you know, if you want to do fundamental analysis, add this to it. And remember that the price is king, you know. All right, so there's your 5 count right there. And so we are, like I said, we came back up here. Then I'm gonna close this out. I'm gonna show you the dollar and then silver. Let me show you silver real quick. Remember, let's see. It goes this weekly. I want you to keep this image in your mind. This dip here from 2011. Okay. So just like on this symbol, this is a comparison between gold relative to the US dollar. So strength goes from one side of this seesaw to the other. So either gold is rising, which would make the dollar fall, or the dollar is starting to rise, which would make gold fall. It does happen that they both go up together, but it's very rare and it's very brief. Okay. So the main thing is that's gives you a key to what's going on in macroeconomically is gold versus the dollar, and oil. How does it relate to that also? So, so we know that oil has been stressed because we have too much of it. Okay. Forget all those markings. I should have cleaned that up. All right. Got a little ghost image of past prices. They don't have the kind of like estimating where the price was because I don't think they had all the data. All right, so let me move it this way. So this is where I said gold started to rise. This is 1971. This is when we came off the gold standard. This is where I was telling you that dollar essentially is designed to decline. That's what it does. Okay, so this is a picture of it since 1971. And when you were looking at gold, you were seeing almost a flipped version of this. Okay, and the euro is almost also like a flipped version of gold. This is the US dollar relative to the Swiss franc. The euro / USD is almost like a mirror image, a flipped version of this. All right. So remember, gold had that peak in 2011. Well, the dollar, had a decline in 2011. And so when they tell you that the dollar is dying, dollar has been moving up, hit a peak here around 2015, around November, and it's pretty much been going sideways to slightly down. but it's nowhere. Until it makes a. This is what's strange. Gold eclipsed its 2011 high. It made a higher high. So I'm sitting up here for the past couple of weeks, going, wait a minute. Does this mean that the dollar is going to make a go low, below this low? It's confusing. But it stops being confusing when you stop looking at gold. When you go and look at let's look at silver. Okay, this is 2011 when the dollar started rising. This is 2011 when gold started falling, silver started falling too. Okay, so you'll see a similar thing going on with copper and um, gold companies and stuff, oil companies too. All right, so but silver didn't hit its low. Gold hit its low in 2015. Silver just kept falling. It didn't hit its low until March of this year. So silver was just getting the hell beat out of it since 2011 consistently. And silver has like more industrial usage than gold. So it's actually more important. Gold is like psychologically important, but silver is functionally important. We need silver to make electronics and all that stuff. So the silver had this tremendous rise, and it's looking like it's rolling over too. Let me put this ugly. Bam. The biggest gold company, I have not looked at this. So I'm going to be this company right here, Barrack. It's one of the largest gold companies in the world. Let me check this because I'm always getting them wrong. They do more than gold. I need to let me make sure because I hate it when you know how you make the same mistake over and over and over and over. Let me check behind myself. This is one of my favorite sites, y'all. Bar chart, and you'll see why. I'm sorry, no. Oh, you're the one supposed to be checking. There it go. You come over here to the left, any company, any symbol, you type it in there. You come over here to the left, says profile, and they talk to you in plain English, okay, and tell you what do they do. Okay, international gold producer. They used to have more information in this, but yeah, okay. I thought it was what's that other one? There's another one. It's huge. Oh my God. It's gonna come up this way. Hold on. Now my mind just won't let it go. There's another company. Yeah, I clicked on competitors. I want to see by size. You go fundamental. I could have just gone market cap. I should have just gone market cap. That's where I'm going. You got to call them here for market cap. Market cap is how much money. If you added up all the money invested in that stock, and you all the money that all the money all of the money that stock has attracted, if you was to give it a dollar amount and say, okay, the world has bought this dollar amount of this particular share, that's market cap. Okay, so the market cap leader is Barrack. Okay, so it is the one, but there's another company I can't think. I'll let it go. I'm obsessed over this, but so that's the let's see the symbol. What does the chart look like? See, I haven't looked at this in a while. I identified this area that the price might reach. Bam, it went right there. And this is a quarterly chart. And you can learn to do this too. Get you a teacher. My rate is like obscenely low. It really is. You'll never find anybody doing it. It's for the rate. I owe an apology to the people charging a lot of money. Not that they don't deserve it, they do. But my rate is it's almost free. I got a Patreon amount of $10 a month, and you get personal daggone training. You can just be me and you. If you want to open it up to other people in the group, okay, it's up to you. It's your choice all the time. The people in the chat, if they there, they can hit one and they can confirm that is the way it is. You don't want people seeing your mistakes, but me. Okay, that's the way. But okay, you start getting like you think you got it. You want to flex and stun a little bit. You can open it up and let other people, or if you just, you just don't. You can handle, the criticism or whatever. You put it all out there. Encourage other people to keep going. Okay, so this is Barrack. So same deal. 2011 it started falling. Okay, this is a typical retrace and an ABC pattern. Textbook. My students see this 50% retrace. You know that. You should know that well. All right. So this thing is acting pretty suspicious at that point. Now the point is, gold versus the dollar, the Forex symbol made a new high. But when you look at all the gold charts, the gold companies, silver, let me check copper. Let me check that. Let me be sure. I might be wrong. Okay, this is the biggest silver company, Freeport. I'm sorry, not silver, copper. But they actually do a little bit more. They're mixed, but they're huge in silver. In addition to the other things that they do. And let's see when they started to decline. Okay. Well, it's actually 2008, and they came back, recovered, and then started declining in 2011. So the point still is, when I look at the whole metal complex, they look like the inversion of the US dollar, where the dollar had its low in 2011 and it showed strength and has been up and sideways. And everything in the gold metal space should look down and sideways. That's the normal chart. But when you look at gold, it's the oddball. So you kind of have to throw that out. So now I'm back to this. And my issues of not wanting to trust this, but maybe I should. I have everything I need in terms of Elliott wave theory. It's showing me a 5 count, and maybe I'm just making too much of the fact that it made a higher high. This daily price. Price is truth. Okay, I need to believe what I see. I need to believe what I see. I'm going to check out y'all in the chat. That pretty much does it. I've been forever meaning to do this presentation, but you need to definitely keep this chart handy and look at this 100-year period and this, several decade, 26-year or whatever this was before you got to break even, and keep that in mind when people tell you gold is always safe. And the troubling part is some of this crap that we both see are lies. We see it's a lie. It's not an opinion. It's fucking stupid. It's stupid and false. We can see that. But you'll turn on the television and you'll find members of the financial media peddling that damn lie. What is going on? So, when this pro-black says we create an underclass, that's my information backing it up. Don't teach you in school, give you false information in media, and allow the daggone lie to persist. I want to thank y'all for riding with me today. Thank you, C.R. Frank. Thank you, Sean Carter. Black Torch, Dre, Raphael. What's up, bro? Oh, I got a new name, brother. As Osili Estiwa. If I please write your name phonetically, because I really do, it's important to me to respect names, okay? And seems like a brother from the continent. So please help us say your name, brother, and write it phonetically. And you made me think of my only trip to the motherland, where I met a brother and I said, "What's your name?" And he had some name like Bob or something. I'm like, "What's your name?" Don't give me that. Gonna tell me some white man name. So he told me the name, and I'm like, dude, I'll struggle with it. I'll learn it. Say your name, man. Let me respect you and call you by your family name. So, brother Osile Oestiwa, write your name phonetically, so so I can learn to say it. You know, let me put some respect on your name. All right, what's happening, Sam? I am Raymond Woman. My day one, y'all. She definitely supports it. She's in your corner. She's riding with you. She gonna ride with you, ride or die. Raining Woman. Okay, let me see that kitchen. Get everybody. Ill Wills. What's up? What's up? What's up? All right, Iori, brother 666. S Dow. That's your thing, man. I've been looking at it. It hasn't broken out that channel, but we still got what, 3 more trading days left in the week. I'll tell you a thing about these markets, is psychology ruling it. In uptrends, the money shot about what's really going on happens at the end of the week. If the market closes negative on a Friday, that's telling you that there is extreme fear in the market, that the emotional sentiment has flipped from fear of missing out, y'all call FOMO, because when FOMO is the mindset, people leave their money in the market over the weekend because they're afraid that they're going to miss out on the pop on Monday. But when the sentiment reverses, they're terrified. They don't leave their money in there on Friday. So you'll really get a sense of what the sentiment truly is, what their long range point of view is, what their how they're in their feelings, okay? And what exactly those feelings are based on if that market, if this week closes up or down. Because if you leave your money in, when people leave their money in the market, I'm not encouraging anybody to do anything. I'm just telling my opinion. I'm not a financial advisor. Okay. I'm just saying that in my opinion, okay, and everything I've read and my observation of it, in downtrends, the market is weak towards the end of the week. And any little snapback rally you get, it'll be early in the week. That's the profile of a downtrend. Whereas in an uptrend, the market is strong near the end of the week because of FOMO. And then you might have a little pullback in the beginning of the week, then end strong again as FOMO returns as you get near the end of the week. But like I said, when pessimism starts to rule and fear, when pessimism and fear overwhelm greed, okay, the inverse happens where you have closes. The market will close negative. You can. This is again why I love technical analysis. You don't have to take anybody's word for it. You can look at a daily chart and sit down with a calendar and look at the date of every Friday and go and count and see in uptrends if most of the Fridays are green. And in downtrends, count and see if most of the Fridays are red. So that's, hey, technical analysis is nothing like it. It's the most powerful thing I've ever learned. Okay, it really is. It is the most powerful thing I've ever learned. But that's all I got, fam. Thank y'all for riding. What's up, DJ Nav? DJ Nav. It's O for short. Oh no, nah, man, nah, bruh. Nah, bruh. Don't be talking about your name O for short. We don't want to know no O for short. At least let us understand how to say your name. Spell it out there phonetically for us. Give us a shot at it. Spell it the way we should say it. Talking about it's O for short. Nah, bruh. I'm awake. Spell your name phonetically, brother. And DJ Nap, I'm gonna take care of your wrench, man. Y'all see, I haven't put a video up in like a month. You know, they was hiding my videos over here, so I just got discouraged. I said, you know what? I'm just gonna give it all, everything I got to the people on the Patreon. They'll tell you they hear from me all the time. They can't even keep up. I'm like real busy over there, you know. But man, I would do a video on YouTube, and it would be like a couple of weeks before my video show up on my page. I'm like, oh, come on. Come on. So I think it's maybe some of these comments that I'm making. You know, I mean, I go to other people's video and write comments. I'm getting banned. I'm getting blocked. So I don't know. I don't know. So, all right, I guess brother O ain't gonna write his name, but I'm gonna be harassing you on this point the next time, okay? Until you get it. We need that. We need to learn, we need to learn how to say it, Tell us what your family culture means, what your name means, And I'm out of here, y'all. I should be doing another one maybe tomorrow, getting back to some S&P 500, looking a little deeper into what's declining and where the opportunities are. There are certain industries that are not that I do not think will decline. Okay, all right. I think that it's a good number of places where you can invest in this market, but these are industries that are not being talked about. But like I said, in technical analysis, we're always looking at where the money is going. So where the money is going, that's kind of what probably my next video is going to be. So just so you can have a shot at getting some balanced information, as opposed to everything being about fear, with them showing you these ugly candlestick charts with the price just cliff diving. But somebody's making money everywhere, every day, no matter what that chart is doing. There are ETFs which short the market, so those symbols go up when the market is going down. Let me check this before I go. There's one. This is like the ugliest daggone chart in the world. This thing is painful to look at. It goes. I'm not really recommending this thing, because you really got to be able to read a chart. When you see how ugly it is, you'll see. Look at this thing. It's DUST. It's supposed to go up when gold goes down. Look at this thing. So this decline was from 2014 here. So this is what you got if you bet against gold with this thing. Okay, so this is dangerous, y'all. This is like lottery, Vegas money. Okay, you don't mess with this unless you know what you're doing. And this is not like, remember, there's no automatic or autopilot. No, there's no, not thinking is not an option. Okay, so you can't like just put money in this and walk away. But we can see that people have made money in this. Okay, so this low is $15, and it's at $19. So it's about a week here. Each one of these candlesticks is a day. So yeah, this time maybe about 5 days ago. So it's a nice little gain. So you're talking about what's that? 20%, a little more than 20%. So yeah, so there are many ways to do it, but this would be considered a high risk way. Okay, but there's some safe industries that I'm going to talk about in the next video that they're not going to be talking about on the news. They're going to just be telling you all the fear stuff about, look at what's going on in the market and keeping you focused on the destruction. I'm gonna talk about the destruction too, but I'm also show you the other game going on where our money is rotating. So, all right, I'm out of here. Peace.